Welcome back to the next subchapter of Chapter 4 of our little introduction to value-added tax. In contrast to the first three subchapters, which are more general and which you usually have not to check every time, the distinction between delivery of a good and a service is vital and has to be thought over in each individual case or for each individual transaction. So you have to be very careful with what you learn now and to memorize it well. Okay, so the best thing is we just begin, we start and jump into the stuff. As you remember, there is paragraph 1, section 1, number 1, UStG, the most fundamental rule in the taxability rules, which says that deliveries or services rendered by an entrepreneur within the scope of the entrepreneurial activities for consideration in the inland is taxable. So delivery of a good or a service must be given, otherwise you don't have a taxable transaction. And you also have to identify which of them is it, because you need that clear decision in order to find out the right rule on the place of supply of the delivery or of the service. So it's vital to answer the question carefully for each individual transaction. So we have either the delivery of a good, defined in paragraph 3, section 1 UStG, or if you go back to EU law in Article 14 of the VAT directive of the EU from 2006, or we have a service. And what a service is defined in the German legislation in paragraph 3, section 9 UStG, or Article 24 of the VAT directive. So these are the two alternatives. And the first conclusion which we can draw is if you get money, but you did neither deliver a good nor render a service in order to get that money, then what you got is not a taxable turnover, cannot be regarded as taxable at all. Nevertheless, in real life, you very rarely get money without having done something for that. There are only a few exceptions, which nevertheless can happen in economic life, can have a certain importance for business, and which should therefore be known. The first is you don't do something for somebody else, but somebody just does something for you and has to compensate you for the damage. For example, somebody damages your car and has to pay for the damage. That was neither a delivery of the good, you didn't want to sell your car to him or her, nor it was a service you didn't allow. Would you just like to hammer down on my car? No. Somebody just did something without you doing something for them, and the law says that person has to pay damages. Also, imagine somebody is in delay with payment and you charge them costs for a reminder, or you charge them interest for the delay. In that case, also, that was not the consequence of a delivery of a good. That is also not an ancillary service to the underlying contract. That is just somebody does something which is not allowed and has to pay compensation for the damages, either in form of refunding the costs for the reminder or interest for the delay in time directly under the law. There are also some other few events which are, according to jurisdiction only, not classified as deliveries of goods or services in the sense of the VAT legislation. For example, if you place money in a bank account, you will in return get interest, probably. Very small interest, but you get it. One could see that as giving the bank credit in return for interest, so it could be seen as a service. But if you would regard that properly as a service, the consequence would be that probably every individual in the population would have to be classified as an entrepreneur with the core activity of having a bank account, because nearly everybody lends money in that way to a bank in return for getting a very small interest amount. That would be independently done. It would happen on a sustainable and constant basis, and you would have one of the aims which you follow, but that would be to obtain revenue interest. The courts have held that this result would be from the system of VAT impossible, because it would turn everybody in the population into an entrepreneur, and so it would directly deprive the system of indirect taxation of all its sense. Everybody would then have to hand in a tax declaration again. So they said just depositing money is not a service or a delivery in the economic sense as they expressed that. Also, later they also decided that giving contributions in form of equity to a company in return for shares also does not constitute an economic activity in itself, also neither a service nor a delivery, and holding these shares in expectance of dividends afterwards also does not constitute a delivery or service. But these two cases are rather peculiar, so they just follow from jurisdiction. Courts have found some nice reasons to base their judgment on, regard these two cases rather as curiosities. But the first two are relatively important, that one should know that in cases where damages have to be paid for, this is not because a service has been rendered. And so in cases where somebody, an enterprise, claims financial damages from somebody else because a good has been damaged or some rights have been violated, that in these cases no VAT may be charged. And if you make an error, you remember that from the introductory sessions, if you make an error and confirm VAT in an invoice, then just because of that simple mistake, you will be liable to pass on that VAT amount to the fiscal authorities until that invoice has been corrected. And the person who received that invoice and naively paid that VAT amount as a part of the invoice cannot claim an input tax refund for that wrongly confirmed VAT, because an input tax refund is only granted for that VAT which is correctly and legally owed by the taxpayer. So these things are important in the beginning, but they are not very frequent. They are on the other side rather very, very rare. So let's concentrate on what a delivery of a good and a service is. A delivery of a good is the transfer of the position like an owner of a good, regulated, as I already said, in paragraph 3, section 1 of the German Umsatzsteuergesetz. And if you want to see where that goes back on, have a look into Article 14 of the Value-Added Tax Directive. So delivery, transferring ownership, is virtually or actually selling an asset, selling a good. Now, The expression position like an owner instead of transfer of ownership clarifies we don't look to the juridical term of ownership alone. It is not the name which counts, but the material substance of what's going on, economic reality. So that is why they formulate the position like an owner must be transferred concerning a good. So imagine somebody deals with stolen goods. First, that's not a very moral behavior, but it happens. So with stolen goods, you cannot transfer ownership with legal effect. Stolen goods can never be sold on with legal effect to a buyer, at least not under German civil law. But naturally, you can deliver them under value-added tax law, because if you sell goods which have been stolen, then you will not tell the buyer they have been stolen. So the buyer will probably imagine I am the owner now, and the buyer will like to behave as if he or she were an owner. And under normal circumstances, nobody will ever find out that these goods have been stolen. So under normal circumstances, we can expect that the buyer can behave like an owner, actually without any hindrance for the complete period of existence of that assets. So although from legal theory the buyer has not become owner, actually the position and all the rights of an owner were transferred to the buyer. That is why value-added tax would classify that transaction as a delivery of a good. By the way, you remember in that context that illegal actions will never be taxed more favorably than legal ones, so that the tax law for this reason disregards if the transaction here was illegal or not. It just says, okay, virtually or actually the same happened as in legal business. Somebody got all the important points of ownership transferred, and that makes up a delivery, so that that vendor should also pay VAT. It would even be a scandal if this illegal transaction would not be taxed. It would ruin the markets, because then the seller of stolen goods could sell cheaper than the legal competitors, and it would even be a high degree, create a high degree of inconvenience for the seller, because imagine the seller writes you an invoice without VAT, then you would directly know that this is a stolen good. So nobody would ever like such a deviation from good customs. So it makes sense under the perspective of all people involved that it is sufficient that the position like an owner is transferred. So stolen goods can be delivered, and on the other hand, sometimes you have the other extreme, that you transfer legal ownership without transferring the underlying rights. Imagine, for example, you take up a credit from a bank and you give them ownership of your car just as a collateral for the credit. That means they are now legally the owners of your car, but you can go on using it, and the bank only has the right to confiscate the car and sell it on if you no longer pay correctly your installments and interest for the credit contract. But as long as you do this, the bank has no right to interfere with your car. So what they got was only the name of ownership only. And under normal circumstances, one can expect you go on paying for your credit contract regularly. Under normal circumstances, it is never to be expected that the bank can ever dispose freely like an owner about your car. So just to transfer legal ownership as a collateral is the best example for not being a delivery. There, nothing happens as long as you pay the credit amounts correctly. One can definitively not speak of a delivery in the sense of value-added tax, because here you only transferred the name of owner, but no rights of owner. You retain every right to behave like an owner with that good as long as you correctly pay. So that's the theoretical and practical difference between the terms selling or transfer of ownership and delivery of a good in the sense of value-added tax. But naturally, in most, let's say 90 or 99% of all practical cases, naturally, selling and transferring ownership is identical to delivering a good. Now, delivery of a good also includes the notion that ownership is transferred, or the position of ownership is transferred. Now, transfer means you have first ownership in the hands of one person and later you have it in the hands of another person. If the owner remains the same person, you cannot speak of a transfer of ownership. So a withdrawal of a good brings along a theoretical problem. If an entrepreneur takes home an own asset from the firm to the private sphere, such a withdrawal is under the basic definition of paragraph 3, section 1, not to be regarded as a delivery of a good. You cannot give reasons for why ownership should have changed here, or an ownership-like position. Nevertheless, that would be a vital and dangerous gap in the system of value-added tax, because then everyone who runs an enterprise could buy something for the enterprise and later take it home for private consume without having a taxable transaction, because it's not a delivery of the good under the basic definition. Owner, when you take it home, remains the same. This would be a very big loophole through which people could escape and have untaxed consume. So it's understandable that the legislator tries to close the loophole by a special rule. Such a special rule on the withdrawal of goods says nothing else than, in case of a withdrawal of a good, there is no transfer of ownership, but for the application of the VAT law, you have to do as if ownership had been transferred. So a withdrawal of a good from the business sphere to the private, no, from the enterprise sphere to the private sphere has to be qualified by way of fiction to be a transfer of ownership and to be for consideration. Because naturally, if I withdraw something, I can't pay myself money. So you have also to replace that criterion by a fiction and to say, we do as if there would have been a consideration paid. This is regulated under paragraph 3, section 1b, UStG in the German rules and article 17 of the VAT directive, and is vital for closing loopholes. The last element of a delivery is that a good can only be a tangible object, so what you can touch. So selling a right can never be qualified as a delivery, but that will always be a service under the VAT rules. Even if you sell the right and transfer the ownership of the right, as it is not a tangible object, it can only be qualified as a service. Tangible objects are all things which you can touch, Also electric current. Well, you can touch electric current in real life indeed, but in most cases only once. Warmth, water, and so things are also treated as taxable objects. For a long time, the German administration also treated the goodwill of a firm as a tangible object until the first judge came along and asked them if they have ever seen or touched the goodwill of a firm. And then there was a bit of surprise. They couldn't remember ever have touched a goodwill. And indeed, goodwill is something intangible. So the courts have ruled selling goodwill is naturally a service. Well, so you now know what the delivery of a good is made up by. And now let's hop over to the other element. What is a service, ladies and gentlemen? A service is very easily defined. It's every transaction which is not a delivery of a good. You can find, as I already mentioned, this definition in section 3, or paragraph 3, section 9 UStG, or article 24 VAT directive. So this definition implies a testing sequence because you first have to test if something can be qualified as a delivery of a good, and only if that ends up with no, it can't be, then it's possible to think of a service. Now a service can do everything which you can do for somebody else. So doing something for somebody else, renouncing or refraining from doing something because somebody else wants it. So that's also doing something for somebody else. So imagine there is a street musician who plays music. If you like that, you ask him to go on and he renders you a service. Now it might be that you hear the music and after a second say, oh, could you please stop? If he then stops playing, he will do something for you. So that also can be a service. Also tolerating something can be a service. So that somebody moves into a room which belongs to you, tries to live there. You don't conclude a rental contract, but you don't evict that person from your house in return for monthly payments or which that person begins to make to you. That might also be a service. So a service can really be everything which you do in an active or passive way for somebody else. But necessarily it must be, from a logical point of view, done for someone else. You can't do something for yourself and classify this as a service in the basic meaning of that word. So service is everything you do for somebody else. Remember the slightly different case that somebody damages your car and then has to pay for the damage. That shows, okay, you have not done anything actively, but you also have done nothing passively. You did not tolerate something. You did not allow something. You did not refrain from doing something in order to be nice to somebody else. No, just something happened and it entailed the consequence that you had a financial claim or the claim that this thing should be repaired against the person who damaged your car. Well, again, if we define a service this way, that's plain and simple. But there is again a kind of a gap or loophole in the definition. If the enterprise owner uses services from the enterprise for own private purposes, in that case, the enterprise owner would have an advantage over all the rest of the population because he or she would be able to have private consume, in this case of services, completely untaxed and free of value-added tax. Although the idea of VAT is that every private consume shall be taxed in the same way under VAT. So there is a gap in the definition, and the law closes that gap in the same way as it did that in case of the delivery of a good. They just add a special rule which says, okay, in case where somebody withdraws advantages of some kind from the own enterprise, this is deemed to be a service for consideration. So we accept under the basic rule, it cannot be seen as a service, but we don't care about that. We want to have also this text, so we just make a special rule which says, okay, even if it may not be a service, it has to be a service, and as we write the law, we can say what has to be done, and so there is an additional rule in the German law in paragraph 3, section 9a, which simply states withdrawal of services by an entrepreneur for his non-entrepreneurial activities has to be seen by way of fiction as a service for consideration. This way, the gap is closed. Now, you have to decide, and that I mentioned already, you have to decide if a transaction has to be qualified as a delivery or a service, because that distinction is of huge importance later for the correct determination of the place where the delivery or service has to be taxed. So it's enormously important, because if you commit an error there, the whole rest of the argumentation will possibly be infected and in most cases will become wrong. So we need to we need to inform ourselves very well on the distinction. You can easily understand the distinction if you read 3.1 very closely and thoroughly, and if you insert one small phrase or word between the lines. 3.1 says a delivery of a good is every transaction where the position, like an owner, of a tangible good is transferred. And now you can say, okay, where the ownership position of a good is transferred, you can insert between the lines the nice words, at least. At least the ownership of one good is transferred. So when you can find a uniform transaction, so that you have only one transaction, then the first logical conclusion is you can only classify it completely either as a delivery of a good or as a service. There is no compromise possible, because only these two legal possibilities exist. So you have to decide. But if in a whole bundle of things which happen, at least one good changes the owner, then 3.1 is fulfilled. If in a transaction, the position of owner of a good changes, then it's the whole thing is a delivery of a good. So it has to be classified as delivery. The only exception which is possible is if that good which is transferred is a kind of ancillary, no, it's not a kind of, but is an ancillary element. You remember that from the preparatory steps, the 3 ones which are recommended to you. Think if several things happen together between the same contract parties, then you have to decide first if they form a unity, a uniform event. And if that is the case that they only form one single event, then you should first leave out of consideration all these elements which are on the ancillary, so which do not really matter for the transaction, but which are only added to make the main aim more conveniently reachable or to make the contract more easy. And so if the good in question is such an ancillary element, then it shall be ignored from the beginning. And so that is the explanation. If something has only a minor or no importance for the transaction in question, then naturally it does not count for the qualification and then it can be ignored. Now that sounds rather abstract, let us think about some details or some examples. Imagine you have a sculptor who produces a statue from marble, and the marble is furnished by the sculptor himself, and then the sculptor does some highly professional work and turns the statue into the marble into a statue of, let's say, Abraham Lincoln or whoever. Now, when the statue is finished, naturally, most of the cost was for the labor of the sculptor, but we are probably agreeing that this is a uniform transaction. And we also agree that the tangible good which you receive in the end, the statue, changes the owner. So we have a statue which changes the owner. And we probably can also agree that the statue, as the final result of the process, is very much material for the customer. And nobody would buy the sculptor's work without getting the finished statue. That was our primary interest. So that's not an ancillary element, this good, but this is even the main element of the whole transaction. So this is clearly a delivery. Now let's vary the situation a bit. Our customer has already bought a huge block of marble and now goes to the sculptor, let's call him Michelangelo, and says, here is a block of marble. And I have the idea that here Moses is sitting in that block of marble. Could you please hammer away everything from that marble block which does not belong to Moses? And Michelangelo says, okay, 30,000 euro, and I do it. Now, afterwards, you get a statue, Moses, consisting of marble. But now, if you look to the situation a bit more closely, the marble which constitutes the Moses statue is your marble. So what you get is nothing else than the material which you have already owned from the beginning. Did you get any additional good on top? And the answer is no. In that case, no tangible good changed owner. It was always your marble and you got it back, although in a changed form. So the only thing which the sculptor here did is work for you. So that would be a service, because no tangible good ever changed the owner. Now, if the customer again varies the order and says, I have already bought a huge block of marble. Now, my idea is that should be changed into the Greek god Zeus. And my idea is it should look like the Zeus of Olympia, made by Phidias, one of the 7 wonders of the world in the antique period. So I want to have a thunderbolt from pure gold, which has to be held by Zeus' hand. And yeah. So the sculptor goes to work, changes the form of the marble block until you clearly see and recognize Zeus. But the sculptor still has to look for the gold and add it. And so you get back a Zeus statue. And now the question is, did also the ownership of a good change The answer is yes, the gold in the Thunderbolt did first not belong to you, afterwards it's yours. So what you got back was not completely what you owned before, so you also got transferred the ownership of some material. Now that counts in all cases where that good which you got, the material here, the Thunderbolt was not completely immaterial for the whole transaction. And now, honestly, you should ask yourself, if you gave somebody the order that you got a choice made from your marble plus a Thunderbolt from pure gold. Now, if that gold would be missing, would you protest? Probably in the calculation for the offer. Somebody explain to you, okay, my working hours 30,000 euro plus material for the cost for the gold 20,000, so total price 50. And so if in the end the gold was missing, I personally would have a bad feeling and would probably complain. This does really matter. It's not immaterial and totally unimportant for the customer, so that it would only be an ancillary element. Again, another example, you bring your car to inspection and you get it back. The car shop owner tells you that an ignition plug had to be replaced. And then you pay for the inspection fee of 200 euro or so, or even more. And now probably you only pay for the service, because the important thing for you was that somebody checked through the functioning of your car, and the ignition plug was rather a free add-on which you got for free from the car shop owner. You would also have not protested if the ignition plug had not been replaced, or at least had not been replaced for free, or so. That rather unimportant from the perspective of both. So in that case, that would be the reason why that little detail doesn't count. Last example, you need the scientific professional opinion from an expert on a certain difficult matter. And it's agreed that the scientist does some research and later hands in a report and is promised a remuneration of 40,000 euro for that report. Now, when the report is finished, you get, let's say, some 300 sheets of paper printed with a nice report. That printout is a tangible good, and afterwards it's yours. Well, just make the test. Does it really matter, the printout of the professional opinion? Or is it rather an ancillary element where the parties do not really insist on? Just make a test. For example, if you need 2 printouts, would then the expert charge you double the price, or would he or she just say, okay, if you need 2 printouts, you get them. You can also have 10 of them, or do you prefer to have a PDF file instead of a printout, or what else? I can reasonably assume that if you pay 40,000 for a professional opinion, both parties involved will just regard the printout or the material form in which the result is handed over as a nice add-on, or as not necessary and not really important. The decisive thing here will be, from the view of both parties, only the information. So that printout will not count, although the ownership of the sheets of paper passes over to a new owner, to the customer, because that printout is really not the thing which matters. It's clearly an ancillary element and shall be ignored during the whole assessment of the process. Yeah, then, ladies and gentlemen, as you see here, we have successfully dealt with criterion number 4, and the next criterion to be discussed in the next small video will be if something happens in the inland or not, and what we have to take into account when it comes to the discussion of that particular criterion. This is again a good reason to make a break, and I wish you a nice, well, nice recovery from this video till the next video comes. Enjoy the time and don't forget to come back. Thanks for watching. Till later.